So my name is Steve Roth. I'm a tax and accounting partner in Toronto at Zeifmans, and welcome to this part of the session. We have two speakers. Firstly, fortunate to have Krupal Kanaki of India. India, as you know, is a rising future economic superpower of Asia, and he'll be speaking. And then following Krupal, Sten Gunze will be speaking from Germany, which is an economic superpower of Europe, and we'll have time for questions. It's a small group; it's informal, so people should feel free to ask questions, and everyone will be available to speak also afterwards. And then when this is all done, everyone is invited to a cocktail reception on the fourth floor. So we're not on the second floor. There's a rooftop. Kind of cocktail reception on the fourth floor, and everyone can attend that. So without further ado, turn over to Krupal.
Thanks, Steve. So my name is Krupal Kanakia, and I'm a partner with Chakravarti and Shah in India. And hello. So we are a member of Nexia International, and we, along with several other member firms, try to help our clients across the globe. Canada, UK, USA is where my clients have a lot of presence, and Zeifmans, Safries, Smith & Williamsons, Cohn Resnick, these are the firms that help my clients. And I am here today so that if there is any opportunity for you guys to invest in India, you know who to go to. What I'm going to do is I'm not going to do a tax presentation on the tax laws of India, because there are 300 sections, there are 862 subsections, and there are 2,000 provisions. So we don't want to go into that, and we don't want to get...
Oh, that's a pity. That's a pity.
So what I'm going to do is I'm going to welcome you to India, and I'm going to try to make it an investment hub for you all and see where I'll go from there. So what's the agenda? Some macroeconomics, some FDI, what's the Indian advantage, what's the tax regime. Very little part on the tax, but more on... So you all know where India is, hopefully. It's in the center of the world. It could have been America, it could have been Australia, but you see India somewhere in the center of the world. So that's what it is for me. So what's India? At this point of time, the fastest growing emerging market, largest democracy of the world, 1.342 billion as population. So Canada is 35 million, and if you look at 1.342 billion, that's 35 times the size of Canada. So that's the kind of potential in the country. Seventh largest by area, and great diversity in food, culture, language, across geographies. And now, from the last few years, a very politically stable government, investor-friendly government, who's trying to do everything to woo investments across the globe. It's got a young population, so we don't have the baby boomers, we don't have the Japanese problem. Our average age is 35 years of age. 65% of the country is 35 years. So you can imagine the potential in the workforce. These are the growth patterns. So if you look at India, it's 7.1 in 2016, and 17 was 6.7, but then it's 7.4 and 7.8. And it's not a small economy to manage this kind of a growth rate. It's a large economy, and it's still growing at this rate. So I'll show you that in later slides. Vis-a-vis China, we've got an average of 6.7 to 6.8. The US is in the 2s. Europe is almost in the 2s. And the rest of the world is growing at 3.9. Where are we at the moment? So the US is at the top, as always, but India, which was ranked 7 in 2017, is expected to be at rank 5 in 2018 and in 2022. So 7.5 rate of growth and fifth largest economy. That's what you get. These are the markets in the world, but if you see, India is still at the top of its game. So what are the other parameters? 10.35 trillion of an economy, so it's third largest in the world. The GDP of 2.8. Inflation is at 4%. It's comparatively quite less and controlled at this point of time. And then you still have a interest rate of 7.7. So So that's a phenomenal arbitrage that you see over there. So FDI is getting better over the years. We've got close to about 369 billion so far, but if you look at it, it's from 2000 to 2017, but almost 90% of that money has come in the last 4 years. So we'll see that coming up. So if you look at this, 36 billion, 22, 24, 30, 40, 43, 35, it's growing. 17, 18, there was a bit of a setback, largely because of the demonetization and the GST. There was a loss of direction, but then we're back on track. On confidence, again, it's coming up. So India was 11th in 2015, it was 7th, it was 9th, and now it's 8th in 2017. So it's getting the investor confidence across the world. So fastest economic growth, as I mentioned, democratically stable, low cost, a talented workforce, increasing domestic consumption because of the large population being available and the large population at a very young age. Export infrastructure, IPR, the new rules now come up for IPR, patent box. Low valuations and tax and other incentives. It makes it a favorable place to invest at this point of time. And the government's working very hard on this. So if you see the doing business ranking, it was 132, 134, 142 in 2014. And now we've just crossed 100 in this year. And the target is to reach to 50 by the time the government's term ends in 2019. Largely an agricultural economy, but now shifted focus to a services industry. So it's 54% is now services and only 16% is agriculture. So you can imagine the dependence on agriculture, dependence on monsoon is reduced drastically, and now we are more of a service provider. So to make it more efficient, the government has started the Make in India campaign. So it's allowing FDI 100% in major industries and helping in the ease of doing business. It started the Skill India campaign, which is allowing it to train over more than 400 million people to be able to do skilled work. So be it artistry, be it carpentry, masonry work. These are the people who are getting skilled. People in the villages who are able to get the skill sets, and then either they're helping in the urban areas or they are being sent abroad to do the work for the people. So, and Startup India, that's a new initiative which started 2 years back. So low tax, so there's freedom from capital gains, and there's no tax on profits for the initial 3 years of Startup India. So it's again to boost a lot of startups. A very political environment, a very stable political environment at this point of time, and therefore I'll not go through all of this. You already know what the Prime Minister Modi is doing. And what does that lead to? It leads to large deals in India. So recently Flipkart, which is an Indian e-retailer, was bought over by Walmart for a valuation of 20 billion. They invested 16 billion to take over the 80% of the company. We've got Vodafone, who bought over the Indian telecom company for a $23 billion deal. We've got SoftBank, who's been putting in money for solar energy in the country. There's huge potential. It's a electricity deficit country at this point of time, but by 2021 we are going to be electricity surplus, and the solar energy is going to help us to do that. So SoftBank is putting in a lot of money, almost $1 billion in 2018 itself. We've got SoftBank, which is a Japanese investment company, again buying into Paytm, which is a payment wallet. Ola, which is similar to Uber. So all of these Indian companies are being bought over by. We've got an Indian company buy into Gavis, which is a US generic firm, for $1 billion deal. And we've got Amazon to counterattack the Walmart. It's decided to put in 5.5 billion in India. So it started in 2013 with $1 billion investment and moved to 2 billion in July 2014, and by 2016 it had more billion into the country. Pharmacy, Daiichi bought over the Malvinder brothers for a 4.6 billion deal. And this is SoftBank's investment portfolio in India. from 2011 till 2017, and in 2017, if you see in May and August, almost $4 billion being invested in the country. Why are they doing all of this? Obviously, there's potential in the country, and it's just started now. And the government is also helping them to grow. So what's happening is that if you see the FDI caps, in 2006, multi-brand was restricted. It's become 51% now allowed to foreigners to invest in 2018. In the single brand, it was 51% in 2006, and now you see it moving to 100%. In Greenfield, it's 100% always. In Brownfield, it's moved from 74 to 100%. Hospital has been 100%. Automobiles, you could own a company in India and do your automobile business over there on a 100% basis. Telecom was 74, moved to 100. So there is a lot of opening up of the economy to make it a destination for investments. But since we are here in a tax conference, we need to also talk about tax. So what are the forms of businesses that you can, the presence that you can, once you decide to be in India, this is what you can do. You can operate as a foreign company, you can operate as a local establishment. And by me saying you can operate as a foreign company, you can have a licensing office, a project office, a branch office, still gets taxed in the country if you're doing any services, any businesses in the country. If you can operate as a joint venture, an LLP, or a wholly owned subsidiary, and which gets taxed in the country too. So you'd want to know the tax rates. Apart from that, there are sole partnerships, sole proprietorships, partnerships, and LLPs. But if you're investing into the country, you would want to go into a joint venture or a wholly owned subsidiary. What they've also done now is to have a patent intellectual property. To have the patented intellectual property, they're trying to reduce the number of months that it would take to do a trademark research. It would take almost more than a year to do a trademark research to register a trademark. It's come down to 8 months now, and we're trying to aim to less than a month. Financing is now becoming easier. So since India has got one of the highest financing, highest interest rates in the world, we are trying to reduce that. We're trying to bridge the gap to make financing easily available, and there are a lot of tax breaks for doing this. So if a Canadian company invested in an Indian company, the corporate rate of tax is 25% in India. It's not a tax haven, but it's still quite competitive. The dividend distribution tax back to the Canadian company would cost you another 17.65, but then it would be exempt from tax in Canada after the payment of DDT. And if you sold the shares, if you structured it right, if you came through Mauritius, if you came through Singapore, if you came through Cyprus, you could still reduce your tax liability on capital gains. So as I said, corporate tax 25%. There is a minimum alternate tax. That means on book profits you pay 18% tax. There's a dividend distribution tax of 17.65. There are no withholding tax on dividends. And the capital gains would be taxed in your country or in India depending upon the DTA provisions. The tax rates for individuals are not too high either, so it's nil up to 250,000, so that's about $5,000. There's no tax. From $5,000 to $10,000 Canadian dollars, there's a 5% tax. From 10,000 to 20,000 Canadian dollars, it's about 20%, and anything above 20,000 Canadian dollars, it's 30%. So it's still much less than the 53% tax that the Canadian pays.
What's the compliance like in terms of the number of taxpayers that actually pay tax?
Very less at this point in time. So out of the 1.34 billion population, the the people who are registered to pay tax are close to about 18 million.
So that would seem like a good opportunity for the government.
And the people who actually land up paying tax are about 40 million, so it's half. So because you need to have a PAN, you need to have a registration number, so there are 80 million registered, but there are 40 million who pay tax. In spite of such low...
Is that because there's no consequences? Or there's no policing?
So initially, yes. 36 to 37% of the population is below the poverty line. So obviously they don't land up paying taxes. So do we have a well-established system of taxes? The answer is yes. We've got transfer pricing regulation. Way back in 2002, India is one of the most aggressive transfer pricing regulations in the world. We've got country-by-country reporting. We've got the master file, the local file. We've got now a uniform GST across all states, which was initially fragmented state-wise. Now we have it centrally managed goods and sales tax. And this came up only last year. And one of the first countries to do a tax on digital economy. So we've got a 6% equalization levy.
So I got a question. With all these increasing taxes, does the cost of labor start to increase there?
Cost of labor, not really.
Not really, yeah.
Because there is still a lot of labor. And it's not so much of tax. If you look at the percentage, it's not so much. It's and I do work for a lot of software companies, and I always had this argument with them that it's like water, right? The water finds its balance. So sooner or later, your costs are going to go so high that it's not going to be competitive anymore. But I see them making money every year after year. They're growing year after year. They're making money. So that's something. And the prices are not increasing that much. So you have fresh batch of people coming in every year, and they start at $10,000 to $12,000, a year. So that's still, and that's still happening. That's still happening in my firm. When a fresh chartered accountant joins my firm, he joins at $10,000 a year.
Yeah, but as you get younger and younger people, and the younger generation has more access to technology and all this stuff, they're going to demand more things. So I think the cost of labor in India is going to slowly start increasing.
Hopefully, that's the whole game. That if it increases, the consumption increases, and the cycle moves. But it's going to be gradual. It's going to be slow. So I believe there's still some years for it to catch up. I had this debate in 2000 when software was booming in India, and it's 2018, and it hasn't. It's changed the demography of small towns. So something like a Bangalore or a Coimbatore or something has become much more robust now. People have the internet, people have electricity, people have cars now, which they didn't have earlier. But yes, the standard of living has not jumped 5 folds or 6 folds. It may be twice of what it was in 2000. We don't have thin cap rules, but we have something that is an interest deduction limitation. So we got this for 30% of your EBITDA. So pretty much internationally, whatever you see on your menu from tax perspective, we have all those regulations in place. Yes, the tax authorities can get aggressive, and that's the problem. That's the problem that the government is also trying to address, and therefore they are the current government, the current Prime Minister, Mr. Modi, is keen to implement an e-assessment process. So what it wants to really do is that everything will happen online. You don't need to visit a tax office. You don't need to go to a tax office ever, and everything will be online. The first year of that has started now, this year. So we as tax practitioners are also trying to embrace this change and see how things go on from there. But it's going to be a full pilot project by 2021. So they've got limited e-assessments going on in this year, and they want to slowly bring the entire gamut of assessments by 2021 on an e-form. So hopefully it's going to be a good change from what we've been seeing in the past. The Prime Minister is quite famous for meeting foreign other Prime Ministers. He visits. He's outside the country more often than he's in the country. So there are many jokes on him, and I can promise you that if you land up investing in my country, I'll at least have him come and hug you. So,
would you say corruption is less or more now?
Sorry, so that's his hug joke with us.
question.
Tell me.
The first one is, does it make a difference if you have a subsidiary or a branch office in terms of repatriating funds and having them leave the country and say come back to Canada? So the actual movement of funds out of the country.
So if you're going to have a branch, it's going to save you the dividend distribution tax.
Okay.
So your branch is still going to be considered if you have a permanent establishment in the country and if you have a regular representation. The branch is going to be considered as an Indian entity.
And there's no constraints on actually wiring money out of the
There's
country?
no concern wiring money out of the branch.
Okay.
So that will not be a concern, but you will still have a full tax in your country.
Right.
And vis-a-vis that, if you go from a company option, then you can do a dividend repatriation. Almost 90% of the profits can be repatriated, so that's a restriction in the company. And you would have a dividend distribution tax, but the income will be exempt in your home country. So a lot of people do actually land up doing subsidiaries than doing branches.
So part two, what are the chances that Modi's going to be re-elected?
So very difficult to answer that, but he's actually done a lot in the last 4 years. Good or bad, that's I would leave that aside. But yes, there have been changes which have happened. So we've had a demonetization, we've had the GST, we've got almost 3 amnesty schemes on the tax front, and plus the other things that you saw: Make in India, Startup India, Skill India, doing business, ease of doing business in India. All of these have been promoted by him. We would have loved to have him re-elected. I think he would be re-elected just for the simple reason at this point of time that there's no one in the opposition. So it's if you had someone strong enough, maybe people are not 100% convinced that he's the right leader. But today, apart from him, we don't see anyone else.
And then the other question is, what was the whole deal with the currency? How they exchanged certain notes and they whatever? Like, what was that? Has that stopped or?
So the
Was
currency
anybody
has
hearing
been.
No. There was something about they got rid of 500.
The
whatever.
demonetization.
The demonetization.
Oh yeah, can you explain about that?
So one fine day on 8th of November 2016, they decided that a 500 rupee and a 1,000 rupee note was no longer legal in tender.
Right.
So and they said that you need to deposit this in a bank, or you need to exchange it with a limitation of 4,000 rupees per day. So the move was to corner people who had elicited money and who had hoarded them in their cash boxes or in their lockers or in their cupboards or wherever that.
Okay.
And that was the whole reason that they did the demonetization, so that those guys would not be, fortunately or unfortunately, and whichever way you look at it, which side of the spectrum you're in, people landed up depositing that money in the banks. So now there are 1.8 million cases which have been picked up for scrutiny, and these are only for people who have deposited money more than 50 lakh rupees. So more than $100,000 Canadian dollars if you've deposited in the bank. If you've done less than that, they're not going to even check it. But if you deposited more than $100,000, those are 1.8 million cases which are now going to get scrutinized over a period of 2 years. And initially the reaction was we didn't get much tax, but I think with the end of this 1.8 million cases, I think there's going to be a lot of tax which is going to come in.
And it was just a one-time thing that happened in 16. It's done now, right?
Yeah, so it happened earlier in the 70s when Indira Gandhi did
Oh
that.
yeah, no, I meant in this period now. It's
Yeah, it was
stable
from
now.
8th of November till the 31st of December, and it's done. There is enough currency back in the system.
Okay.
The whole purpose was also to bring in more digitalization. So the currency which you see now in the system is half of what was in circulation prior to this move. And consequently, the entire Income Tax Act was revamped to make cash payments and cash receipts virtually impossible. So if you did anything more than 2 lakh rupees, you would have to report it to the IRS, and you would also have to pay 100% penalty for accepting cash for more than 2 lakh rupees. So, and 2 lakhs is like $4,000. So so if I accept cash for more than $4,000 from someone, I need to report it, and I need to pay a penalty which is equivalent to the amount that I received. So
Thank you.
thank you. Yeah, sorry.
Is English the default business language in India?
Yes, it is.
So invoices, and
Everything is in
documents,
English.
contracts is
Everything
all
is in
in
English. Yeah.
It's a British colony, so.
That's what-
I know what I'm saying, but that's
So,
for sure.
so people recognize English more than the national language, which is Hindi. So we have states in the south which actually don't speak Hindi, but they speak English. So I think that's the advantage that software.
So even in small towns in India, you would still use English as the business.
So there would be a lot of local languages. In India, the language changes after every 20 kilometers. That's what they say. So there will be a lot of local languages. They would sound different from a village which would be about 40 kilometers away. So, but where the transactions take place, where the business happens, most of that happens in English because the bank records are in English, the ledgers are in English, the invoices are in English, the contracts are in English.
Thank you.
Thank you so much. Thank you.
Yeah.